Welcome you all on the lecture on Ind AS 20, which is accounting for government grants and disclosure of government assistance. So students, today we are discussing about a standard which you are already aware of, right? In our CA Inter, we have discussed AS 12, Accounting Standard 12, where we have discussed what is the accounting for government grants, right? So in the accounting for government grants, we have discussed different forms of government grants in our CA Inter, where there was a concept of government grant in the nature of promoter contribution, government grant in the nature of capital reserve. So these kind of government grants will not be there. So that was the kind of accounting treatment. But normally we are talking about a government grant where government is providing an asset which is free of cost to the company. That is one form of government grant, right? Second, the government is providing an asset which is at a concessional rate. For example, if the government is giving a land to the company and the price of the land is, let's say, 1 lakh rupees per acre, and the government is providing this land at 20,000 rupees per acre. So this is a land at concessional rate, right? So we will be talking about this kind of thing. Third, the government is also providing the grant, or the government is helping or supporting the entity for meeting its expenses, right? So this is known as a government grant in the nature of income. So we will be talking about two kind of government grants. First, government grant in the nature of assets. Second, government grant in the nature of income, right? These two kind of government grants could be of two types again. One, government grant in the nature of cash, government grant in the nature of kind. When I'm saying government grant in the nature of cash means, for example, you are buying an asset and government is reimbursing you the money for that asset. This is a cash, okay? The form of kind is the government is not giving you cash, the government is giving you land, okay? So this is kind of a non-monetary grant, okay? So friends, the difference between what we have read in CA Inter in Accounting Standard 12 versus what we are reading or what we are going to study in Ind AS 20. You know what is the difference? AS 12 was talking about accounting for government grants, But in this standard, Ind AS 20, it is also talking about disclosure of government assistance. Right? So students, this part was not there in CA Inter. This part was not there in AS 12. But we will be discussing this part in Ind AS 20 as well, right? Is that clear? Now coming to the agenda. What is the agenda of this standard? And Ind AS 20 we will be completing in one class only. So today we will complete this standard. First, objective and scope. We are going to talk about the objective and scope, why this standard has been issued, and it is crystal clear that this standard facilitates the accounting and reporting requirement of government grants, right? Then we will be discussing what is meant by government grants. Third, we'll be talking about the recognition and accounting of government grants. If a government is providing a support, how that support will be accounted for. Then we will be talking about what is meant by non-monetary grant. The name suggests non-monetary grants are the grants which is not in the nature of money, right? That is in kind. Presentation. Then we will be talking about how these grants will be presented in the financial statement. Then we will be discussing if government has given a grant and after some point of time, the entity is required to refund the grant. The entity is required to repay the grant. Why? Probably because the entity has not met the conditions attached to the grant. In that case, what is the accounting when subsequently entity is obligated to refund the grant? We will be talking about this part also. And this part is very important. The repayment of government grant is very, 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 very important from the examination point of view as well. Then we will be talking about government assistance. because this standard takes care of accounting for government grants and disclosure of government assistance as well. Then quickly we'll touch upon the key differences between accounting standard 12 and Ind AS 20, right? And there are disclosures which are given in the standard, not relevant from the examination perspective. Okay. Friends, if I talk about the structure of the standard, again, let me repeat, AS 12. AS 12 was government grant standard, which was there in IGAP, right? Which we have already discussed in CA Inter or IPCC. Ind AS 20, this is your Ind AS, which is covered in financial reporting paper 1, right? And this is under Ind AS, new accounting standard. If you are a student who has elected for GFRS paper, so globally, what is the standard? IAS 20, right? This is under IFRS and this is under your GFRS paper, right? There is no difference between Ind AS 20 and IAS 20. Today, the students who have opted for GFRS paper, they are not only learning Ind AS 20, they are learning IAS 20 as well, right? So today, two chapters will be completed. One Ind AS 20 and the second one IAS 20. Okay, there is no difference between the converged Ind AS on government grant versus the global standard on government grant, right? Is that clear? Very good. Good morning, Nidhi. Good morning, Vignesh. Good morning, Namrita. Good morning, Radhika. Good morning, everyone. Let's discuss the objective. Why this standard has been issued. The objective of this standard is to prescribe the accounting treatment for government grants and disclosures relating to government grants and other forms of government assistance. Friends, in this standard, as the title suggests, it talks about accounting for government grants and disclosure relating to government grants. So accounting, so what is accounting and reporting? Accounting includes recognition, measurement, presentation, disclosure, right? For example, if you have purchased a property, plant and equipment, you have purchased a fixed assets. Then first of all, if you have purchased a machinery, whether you will recognize that machinery as a property, plant and equipment, let's say answer is yes. Then comes out at what value? It means you have to see the measurement criteria. First recognition criteria, then measurement criteria, right? Then the third one is once you have measured, now how is it going to be presented in the balance sheet? For example, you will present that balance sheet under non-current assets, right? On the asset side, under non-current assets, you will present that item as a PPE under non-current assets. The depreciation has to be charged to the statement of profit and loss, right? So recognition is there, measurement is there, presentation is there. Then what sort of disclosures are required for PPE? For example, in the notes to accounts, you are giving a PPE schedule where gross block is there. In the gross block, opening gross block, addition, deletion, closing, then accumulated depreciation is there, which is opening, addition, deletion, closing, then net block is there, right? And for example, if the PPE has been placed, right? So you are disclosing that part also. So it means recognition, measurement, presentation, disclosure. These four aspects are very, 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 very important from any accounting perspective, right? So this standard talks about accounting treatment as well as disclosure of government grants, right? And other forms of government assistance. But as far as government assistance is concerned, this standard only talks about the disclosure of government assistance, right? Is that clear? So as far as government grant is concerned, accounting and disclosure both are there. As far as government assistance is concerned, only disclosure is there. Why? Friends, let's take an example. For example, the government has given a land to the company free of cost. right? So can we identify the value of the land? Can we identify that what is the value of the grant which the government has given to the company? Can we identify that? If the government has given a land free of cost, can we identify that or we cannot identify that? Radhika is saying, yes, sir, we can identify that. The value of the land can be identified. Okay. Yes. What about others? If the value of the land can be identified, it means we can calculate the government grant, we can measure the government grant. There is a value placed on it, right? Although the government has not given the money, but the government has given the asset free of cost. So there is a value placed to that support or to that help which is given by the government to the company. So friends, whenever there is a value placed on it, it will be kind of a government grant, and the accounting, recognition, measurement, presentation, and disclosure is given in the stand. Second example, just to promote the company in the rural areas, right? Government has constructed the road from the urban area, I mean to say from the main city to the vicinity of these factories, to the vicinity of the entity's plant. Government has constructed the road. So government has constructed the road so that the transportation can be easier, so that the employees of the company can easily commute, the goods and services can be provided, right? But can we calculate or can we identify the value of this support which is given by the government to the company? The government is indirectly supporting to the company. The government has constructed the road from the main city to the plant, right? So that employees can easily commute, so that goods and services can be easily reached, right? So guys, can we calculate the value of this support which is given by the government to the entity? We can't, right, Rohan? We can't, right? We cannot, because that support cannot be measured in terms of value. Is that clear or that is not clear? So can we say that it is a government grant? It is not a government grant, but can we say that the government is assisting? Answer is yes. It is a government assistance. So if something where the value is not attached, where the value is not placed, how can you do the accounting of that thing, right? What is the difference between a government grant and government assistance? So government grant is something where the value is placed on it, where there is a value. Government assistance is something where the government is supporting, but it cannot be measured in terms of value. For example, just to promote the small entities, the MSMEs, right? Or entities which are operating in the rural areas, entities which is operating in the rural areas, right? Amrita, that's what I'm talking about, the difference between grant and assistance, right? The entities which are operating in the rural areas, government is providing an access of vendor and customer. Government is providing a free access to the vendor and customer, right? So there is a government portal, and government is giving them access also, so that they will be easily able to search the best vendors, and they will be easily able to reach out to the customer as well. So government is giving an access to their portal to these companies which are located in the rural areas. Of course, government is supporting, but can we measure this thing in terms of value? Can we measure this thing in terms of value? Radhika is saying it cannot be measured in terms of value. You're right, because there is no cost attached to it, right? Government is not charging or government is not selling such excesses, right? But just to promote the company, government has given an access to their portal to reach out to the vendor and the customer. What is your view? What is your view? Can we measure this thing in terms of value? Nidhi is saying it cannot be measured. Yes. Friend, If it cannot be measured, in that case, it is not a government grant, it is a government assistance, right? So if the value is not there, how can you do the accounting? So that is why it is a government assistance for which only disclosure is required, for which accounting is not required. But something which can be measured in the value terms, in that case, accounting as well as disclosure, both are required. I hope now you guys have understood. I hope now you guys have understood. Government grant is also an assistance, but that assistance can be measured in terms of value, right? But government assistance cannot be measured in terms of value, right? In case of government grant, there is a quantitative and qualitative, both disclosures are there. Quantitative means in the monetary terms, qualitative means in the narrative terms, right? For government grant, qualitative and quantitative both disclosures are there, but for government assistance only qualitative disclosures are there, only narrative disclosures are there, quantitative disclosures are not there. I believe that it is clear to all of you. You guys have understood why the title is accounting for government grants and disclosure for government assistance, right? Now you guys have understood. Very good. Let's discuss the scope part. This standard is applicable to government grants and other form of government assistance, right? Friends, the company A Limited is there, and there is another company B Limited. B Limited has gifted a land to A Limited. B Limited has given a land to A Limited free of cost. Whether this is a grant, whether this is a government grant, is it a government grant? If B Limited has gifted a land to A Limited, is it a government grant? Yes, it is not a government grant because B Limited is not a government, right? Although we will be discussing the definition of government, but this standard only covers the grant which is given by the government, the support, aid, facility which is given by the government only, right? So if a private entity is supporting to another entity, so that is not a government grant because the private entity is not a government, right? Is that clear? In this standard, please don't get confused. The title is quite clear, government grant. So in this standard, only grant which is given by the government will be covered under this standard. Otherwise, it will not be covered under this particular standard, right? This standard is applicable to government grant and other form of government assistance except, what are the exemption? What is the negative list? This standard does not apply to income tax related assistance. For example, income tax holidays. You guys must have understood section 80. You must have heard about section 80 IA, IB, IC. So there in Income Tax Act, there are some sections which provided some tax holiday. For example, government says that if you will install your plant in the rural area, we will give you tax holiday for the next 10 years, right? So these are as per Ind AS 12, right? So these are the exemption which is given under Income Tax Act, right? So this is not covered under Ind AS 20. This is not a government grant. The accounting treatment will be covered under Ind AS 12, right? So if there is any exemption benefits which is given under Income Tax Act that is not covered as a government grant, that is treated as per income tax standard, which is Ind AS 12. Okay. Is that clear? Is that clear, guys? Biological asset. If a government is giving a grant relating to acquisition of plant or animals, right? So that grant will be covered under Ind AS 41. That grant will not be covered under Ind AS 20, right? So government grant relating to biological asset will be covered under Ind AS 41. It is not covered under Ind AS 12. Government participation. What does it mean? If government is infusing equity, if government is an equity shareholder, right? If the government is participating in the entity, right? In that case, it will not be classified as a government grant. It will be classified as a government's contribution of equity share capital, government contribution of equity. For example, Delhi Metro Rail Corporation. Have you heard about DMRC? Have you heard about Delhi Metro Rail Corporation? If you will see the balance sheet of Delhi Metro Rail Corporation, the equity share capital is funded by President of India and Lieutenant Governor. What does it mean? It means the promoter or the shareholder of Delhi Metro Rail Corporation is central government through President of India and Delhi government through Lieutenant Governor, right? It means central government and state government are infusing equity. They are the capital contributors, right? Government is participating in the entity, it will not be considered as a government grant. If government is infusing money in the company, it will not be considered as a government grant if the government is having a participation, if government is a shareholder, right? Accounting for government grant reflecting the effect for changing prices, right? If government has fixed a price of a commodity, you will not be able to sell beyond that, right? Like price rationing, okay? If government has fixed a price, whatever will be the inflation, the price of this commodity will not go beyond this, right? Government has fixed a ceiling on the prices, right? Just to curb the inflation or just to ensure that malpractices will not happen or that black marketing will not happen. If government is framing a policy to control the price, in that case, it will not be considered as a government grant. It will be a normal thing. It is not a government grant, right? So the standard exempts these 4 items, which is of course, a benefit which may be provided by the government, but it will not be covered under this particular standard. Is that clear? Now let's discuss the meaning of government, right? We need to understand who all are covered in the government. So government includes central government, government of India, government of USA, Singapore government, Malaysian government, right? So it includes central government, state government, government of Karnataka, Delhi government, government of Odisha, government of Bihar, government of Jammu and Kashmir. So state government, okay? Government agencies and similar bodies, government agencies and similar bodies, Municipal Corporation of Delhi, MCD, MCG, Municipal Corporation of Gurgaon, right? MCV, Municipal Corporation of Visakhapatnam, right? NDMC, New Delhi Municipal Corporation. So what are these? Delhi Jal Board, Delhi Jal Board. What are these things? These are the government agencies or similar local bodies. These are the government agencies or similar local bodies. These are also considered as a government. If MCD is providing some support to the company, it is a government grant. Whether local, national or international, whether local, national or international. World Health Organization, UNICEF. What are these? These are the international government bodies, right? So government includes central government, state government, government agencies and similar bodies, whether local, national or international, right? So we have understood the meaning of government. What is the meaning of government? We have understood, right? Is that clear? Sri Ram is asking, sir, in case if government is holding shares in a company, means government is an equity shareholder and government also provide funds to the entity, will the fund be treated as government grant or loan in the financial statement of the company? Sri Ram, you need to look at the terms and conditions of that fund. If the fund is refundable, in that case, it will be a loan to the company. If the fund is non-refundable, it may be considered as an equity participation from the government, right? So you need to see what is the arrangement, what is the documentation. You need to look at that, right? Is that clear? Now coming to the government grant. So we understood the meaning of government. Now, what is the definition of government grant? Government grant are assistance by the government. Government grant is also an assistance. But sir, what is the difference between the grant and assistance which you have talked about? Okay, so government grant are assistance by the government in the form of transfer of resources. The government is providing an assistance. And what is that assistance? The government is transferring some resources to an entity. The government is transferring a resources to an entity in return for past or future compliances, right? In the past, the company has done some good work, or in the past, the company has met some conditions, or the company will meet some condition in the future, and that is why the government is transferring some resources to the entity. The resources could be in the form of cash. The resources could be in the form of asset, right? So government is transferring some resources to the entity, or government is providing interest-free loan, right? So why government is transferring the resources to the entity? The government is transferring the resources to the entity in the return of past or future compliances, right? With certain conditions relating to the operating activities of the entity. For example, government has told entity that government has told an entity, if you install your plant in the rural area, in the area of Chhattisgarh, in rural area, we will provide you 50 lakh rupees of government grant. We will provide you 50 lakh rupees of government grant. Okay. What is that? So government is transferring a resources of 50 lakh to the entity. Why? In return for installing a plant in the rural area, so that there will be some economic welfare, so that there will be some economic upbringing, right? And what is the condition? The condition is to install a plant in the rural area, right? Which is relating to the operating activities of the entity. Second, the government has put a condition to the entity that if you will employ 500 people, if you will give the employment opportunity to 500 people in the next 2 years, we will reimburse you 50% of the salary given to those persons, right? Of course, provided you need to submit all the hisab kitab, and you need to submit all the documents and everything, right? So government is transferring a resources to the extent of 50% of the salary of the staff which is hired by the company. What is the condition? The condition is in return of employing 500 people in the next 2 years, right? Third example, the government has told a hospital, let's say Max Hospital, okay? The government has told Max Hospital or Apollo Hospital that if you will treat the COVID patient free of cost, because the hospitals are looting these COVID patients, right? A person who is having a COVID, if he'll go to the hospital, they will even charging 1 lakh rupees, 2 lakh rupees per day, right? They were just looting the patients. So government told to the hospital, if you will treat the COVID patient free of cost, we will give you a government grant of 20 lakh rupees per month. So what is that? The government is giving a resources in return for a condition. What is the condition? The hospital has to treat the COVID patient free of cost, right? And this condition is relating to the operating activity of the entity. Is that clear? Is that clear? So these government grant are the assistance, but these are those kind of assistance which is having a value, which can be quantified in terms of value. But what is a government assistance? What is a government assistance? The government grant exclude those government assistance which cannot have a value and cannot distinguish from normal trading transactions, right? For example, the government is, let's say, the government is giving a support to the entity. If you will treat the COVID patient, right? what we will do, because a lot of doctors are required, and these doctors are if the doctors are treating these COVID patients, probably these doctors may expose to the COVID, right? And when they will go home, of course their family will be affected as well, right? So government has told this hospital that your doctors will stay in our guest house, right? The doctors will stay in our guest house. Okay. So friends, the government is providing a support to the hospital, which cannot be quantified in terms of value. These doctors are coming at night 2 hours, 3 hours, 4 hours, just to have some sleep and just to have some relax, right? And these doctors are coming to their guest house, which cannot be quantified in terms of value. Okay, so this is kind of a government assistance. Is that clear? Is that clear? Namrata, international government agencies is like World Health Organization, WHO, UNICEF, UNICEF. So Namrata is asking why related to operating activities only. So Namrata, the government grant, right? Why government will give the grant? The government will give the grant to promote the operations of the entity, right? Otherwise, why government will give the grant? The government will not give the grant that if you will invest in shares, we will give you the grant. Have you heard about this? Have you heard about any form or any situation of a government grant where the government has given the grant in addition to the operating activity of the entity? Practically, let me tell you what kind of grant government is giving. Practically, the government is providing an asset free of cost. Practically, the government is providing a land at a concessional rate. Practically, the government is reimbursing some expenses. Practically, the government is allowing the entity to get some raw material at a cheaper price, right? So these are kind of a government grant which is related to the operations of the entity, right? The government will not give the grant for gambling activities, right? The government will not give the grant for the share capital, for investing in shares, right? So generally, the grant is for the operations of the entity, the operations, the relating to the operating activities. Okay. Sri Ram is saying, sir, not clear, sir. The fund provided by the government shall be taken as share capital only if the company allots share to the government. Sri Ram, if the government has infused money, right? Shares have not been allotted. Till the time it will be there as a share application money, right? So that is one. You are saying that, but the company did not allot shares. So how does it matter? It will stood as a share application money if the intention is to issue the shares, right? Also, you said that the fund is treated as loan if refundable and grant if non-refundable. Sriram, I have never said that. You need to understand, for example, I am a government and you are a company. So I have invested in your company and I have invested as a shareholder, right? I have invested as a shareholder. So as a shareholder, if I have invested in your company, what sort of funds I can give you? First, I can give you the funds in the form of equity share capital. Second, I can give you the funds in the nature of loan. So as a shareholder, I have given you a loan that please have this loan, do your work and return me after X period of time. And there is a loan agreement between the between the government and the entity, right? Like for example, DMRC has taken a loan from government of Japan and government of India. Okay, that is one. So either in the form of equity share capital or in the form of loan. And Sriram, it is not a, it is not a, I would say it is not an oral communication. There is a documentation. Okay, there is a loan arrangement, there is a loan agreement. So what I'm saying, if government is a equity participator, if the government has participated in the entity, so whatever government has given free of cost, it will not be considered as a grant. It will be like a equity participation. It will be like a in the form of other equity, right? It is not, doesn't matter, the government will not issue the equity shares, but it will be considered as a deemed equity, right? So when you read, Sriram, have you read financial instrument standard, or you have not read financial instrument standard yet? Have you read the financial instrument standard? So probably you have not read the financial instrument standard yet, because it is going to cover for this batch. So when you read the financial instrument standard, there is a concept of actual equity and deemed equity, right? So it will be considered as a deemed equity. You know, in accounting standard 12, there was a concept of government grant in the nature of capital reserve, government grant in the nature of promoter contribution. So it will be like that, but it will be like that only when the government is having a equity participation in the entity, right? Is that clear? Okay. Sayyad is asking, Satyam computer scam exposed time. Government reforms with the help of Mahindra. Support to Mahindra Satyam is government grant. Sayyad, if government is supported with some monetary benefits, if the government is supported with some benefits in cash or in kind, which can be measured in terms of value, in that case, yes, it is a government grant. But if the government has not, supported in terms of value, in that case, it may be considered as a government assistance, right? So we need to look at that, in what manner the government is supported, right? In what manner the government is supported. If the government has provided a moral support, it is the value, it cannot be placed in terms of value. It cannot be disclosed, right? So you need to see what kind of support the government has given and what benefit the entity has made out of the government support, right? Is that clear? Namrata Singh sir, please repeat last point of scope slide. Namrata, the last point is, government has fixed the price of, let's say, raw material or the price of some commodity, right? Just to regulate the inflation or just to curb the inflation. So it will not be considered as a government grant in the scope of this standard, right? It may be considered as other income, or it may be considered in the different standard, right? It is not covered under this standard. So this standard excludes that, right? We have discussed the meaning of government and government grants. Okay. Is that clear? Sriram, I hope you are clear on this. Sriram, Namrata, is that clear? Okay, so government and government grant and government assistance we have discussed. We have discussed government grant. It could be of different types. Government grants means grants received from government against reimbursement of expenses, right? For example, the government has told that if you treat COVID patient, whatever expenses you have incurred, we will reimburse you that expenses. So grant in the form of reimbursement of expenses or against expenses. Government has told that we will give you 50 lakh rupees every month to treat the COVID patient, right? So it is against expenses. It is not a reimbursement of expenses. It is against expenses. That you please bring the medicine, vaccination, whatever you want to bring, and you need to treat the COVID patient free of cost, and we are giving you 50 lakh rupees. Fulfillment of certain conditions, right? For example, government has given a land free of cost, or government has given a machinery free of cost, or government has given construction cost free of cost. If the company will install its plant in the rural area, or the company will generate the employment opportunity of at least 1,000 employees, 1,000 people, right? Examples of government grant. What are the examples of government grant? Subsidy given by the government for procurement of material. Subsidy given by the government for procurement of material. So the government is given a subsidy. For example, the entity has purchased the raw material at 1 lakh rupees and government has given a subsidy of 20,000 rupees, right? For this entity. It is not for everyone. The government is giving the subsidy to this entity, right? For example, there is a company known as Brahmaputra Crackers and Polymers Limited, BCPL. So they have a plant in Assam. The raw material which they are purchasing, like ethanol, right? So the gases or raw material which they are purchasing, the government is giving subsidy to them. It is at a subsidized rate, right? So if it is at a subsidized rate, if the government is giving a subsidy, so it will be in the form of a government grant. Free allotment of land by the government. Example, government has given a land free of cost. It is an example of government grant, right? Forgivable loan is government grant when entity meets the terms of forgiveness of loan. The entity has given a loan to the government. Sorry, the government has given a loan to the entity and government has told that if you will meet these conditions, I will not demand back the loan from you, right? The entity has, the government has given a loan of rupees 1 crore to the entity and government has told if in the next 5 years, if you will be able to generate the employment opportunity to the extent of 1,000 people, we will not demand this loan back, right? But if you will not be able to do that, of course, you have to refund this loan to us after 5 years. Interest-free loan or at a concessional rate. The government has given interest-free loan. So the interest element will be a government grant, right? So these are the examples of government grants. Now let's discuss the accounting part. Let's discuss the accounting part. A government grant, when you will recognize the government grant? Friends, tell me, if the government has given you the grant, the entity has already received the money. Should the entity recognize this grant as a government grant? Friends, if the entity has already received the money, whether the entity should recognize this government grant as a government grant income. So government grant should not be recognized until there is a reasonable assurance, that entity will comply with the condition and grants will be received. In this case, the grants has already been received, but you need to check whether entity will comply with the condition. And let me give you an example. The government has given a grant to the entity in the tune of 1 crore rupees, right? Upfront grant. The government has given upfront grant. The entity has passed an accounting entry bank account debit to government grant account. So now what was the condition? The government said that I am giving you 1 crore rupees and in the next 3 years, you have to generate an employment opportunity of 1,000 people. I'll check your register. I'll count your employee. In the next 3 years, you have to reach at a level of 1,000, right? And if you will not be able to meet this condition, after 3 years, I will get this grant back from you. I will get this grant back from you, right? So this grant will go back to the government if the entity will not be able to meet the condition in the next 3 years. Sri Ram is an auditor of this company. When the money has come, the entity has recognized this money as a government grant income, bank account debit to other income. Sri Ram has told the entity, First of all, you need to prove me whether you will be able to comply with the condition, right? And when Sriram reached to the client for the audit, already 8 months has gone. Already 8 months has gone. And as per the management of the entity, they do not want to start the operation at least in the next 2 years. Are you getting me? कि भैया मैनेजमेंट का तो कोई अभी तक कोई मैनेजमेंट का व्यू नहीं है. मैनेजमेंट इज सेइंग कि कम से कम 2 से 2.5 साल लगेंगे हमें ऑपरेशन स्टार्ट करने में. सो मैनेजमेंट इज सेइंग दैट we will be able to start the operation in 2 or 2.5 years. So as an auditor, Sriram is saying the government has given you a condition of 3 years. You are saying you will not be able to start the operation at least in the next 2 or 2.5 years. And 1,000 employment opportunity is a big number, right? It means it is difficult to meet the condition at least at this point of stage, where the management do not want to start the operation in the next 2 or 2.5 years. So how the management will able to engage 1,000 people? So in this case, although money has already been received, but it seems difficult that the company will be able to comply with the condition, right? There is no reasonable assurance that the entity will be able to comply with the condition, and hence this grant will not be recognized. Not be recognized means this grant will not be recognized in the P&L, in the income. Sir, what will be the accounting entry in this case since money has already been received? So the accounting entry will be bank account debit to government grant liability account. Okay, sir. Sir, what happens if the management will fast track, and when Sriram will come for the audit again in the next year? It's been 1.5 years, but the company has started the operation on a fast track basis. And the company has already offered around 600 employees. And now the company has to hire another 400 employees in the next 1.5 years. And the company has enough capacity. The company has started getting orders. The company is in the expansion stage. So there is a reasonable assurance that the entity will be able to offer another 400 people in the next 1.5 years. Right. So in this case, at the end of the second year or at the end of 1.5 years, there is a reasonable assurance that the entity will be able to comply with the condition, and this this government grant will not be refunded. जब पहले साल श्रीराम ऑडिट पे आया, उस टाइम पे the reasonable assurance was not there. But श्रीराम जब सेकेंड ईयर में ऑडिट पे आया, उस टाइम पे there was a reasonable assurance because the things have moved at a fast stage, right? So now at the end of the second year, now it is a reasonable assurance that entity will be able to comply with the condition and grants will be received. So in this case, the liability will be debited and income can be recognized, right? Why? Because money has already been received and there is a reasonable assurance that the grant will be received. Okay. Sorry, there is a reasonable assurance that the condition will be complied. So in this case, if these two conditions are meeting, the entity has to recognize the government grant. First, conditions, there is a reasonable assurance for meeting the conditions, and second, the receipt is certain, right? Receipt is certain, virtually certain. Is that clear? Is that clear? Sir, for example, the government has declared that if you will employ 1,000 people in the next 3 years, we will give you 1 crore rupees, right? As a government grant. But of course, we will check in the 3 years. The government has already issued a notification letter to the company. At the end of the second year, the entity has already employed sufficient number of people. And there is a reasonable assurance that the entity will be able to meet this condition, right? They have already employed 700, 800 odd people, and looking into the scale and size of the operations, they will be able to offer the employment opportunity to another 2 or 300 people in the next 1 year. So at the end of the second year, there is a reasonable assurance that the entity will comply with the condition. And since the entity has already in touch with the government, they have already got a letter from the government, and they are having a notification that yes, this money will be received, right? They are regularly giving the status to the government, and government is also confirming them, yes, we will pay you when you will reach 1000 count. Okay. So in this case, at the end of the second year, there is a reasonable assurance that the entity will meet the condition and the grants will be received, right? There is a reasonable assurance. So in this case, even though money has not been received, but it is virtually certain that the money will be received, right? According to the correspondence of the government. Is that clear? Is that clear? Now let's discuss the accounting part of it. It's the government grant. It is more like a support, right? It is more like an outsider benefit which is given to the entity. If some benefit is given to the entity, of course, this benefit is recorded in the statement of profit and right. Okay, is that right? So friends, if the government grant has been received or government grant is likely to be received, it is recognized in profit and loss for the period. It is recognized in profit and loss for the period in which expense which grant received had been recognized on a systematic manner. What does it mean? Let's say the government has given a grant for the purchase of an asset. Government has given a grant for the purchase of asset. So government has given a grant of rupees 10 lakh for purchase of machinery, and the life is 10 years, right? So the machinery has to be depreciated over a period of 10 years. The machinery is going to be depreciated over a period of 10 years. And for this machinery, the entity has got a grant of rupees 10 lakh. So whether this 10 lakh rupees has to be recognized upfront in the P&L, or this 10 lakh rupees has to be recognized in a systematic manner, the standard says that the grant is required to be recognized in the P&L in a systematic manner, or in the period in which the expenses has been incurred. So in this case, the grant of rupees 10 lakh rupees has to be amortized over a period of 10 years, has to be amortized over a period of 10 years and has to be recognized over a period of 10 years, right? Has to be recognized over a period of 10 years in the straight line basis, right? So on the one hand, for example, the cost of the machinery is 50 lakh rupees. So this 50 lakh rupees has to be depreciated over a period of 10 years. And this 10 lakh rupees has to be amortized and recognized in the other income over a period of 10 years, right? So we are recognizing on a systematic basis. Is that clear? Is that clear or that is not clear? Namrata, Uma, Sayyad, Sriram, is that clear? Nidhi, Viraj, is that clear? Rohan is saying crystal clear, sir. What about others, guys? What about others? Okay, let's move on. Sir, you have told that, for example, in the last example, you have told that if the entity is likely to comply with the condition. The condition was to provide an employment opportunity to 1,000 people in 3 years. And at the end of 2 years, the company has already hired 600-700 people, and they are likely to hire 300 people in the another 1 year, right? They are already in the search of it. They have already discussing with the consultant, and they are in the need of more than 1,000 people. So, sir, we understood this thing, and since you have told us that please recognize this government grant, in the please recognize this government grant as an income, right? In the P&L in that year. Sir, what happens since the time period has not elapsed, right? Future is uncertain. For example, tomorrow there will be some problem and the entity will not be able to complete the hiring of 1,000 people, for example. And you have already told that please recognize this government grant in P&L. Sir, still the time period has not elapsed. I know that there is a reasonable certainty that yes, the grant will be received and the entity will be able to comply with the condition, or there could be a scenario where the grant has already been received, but yes, the entity is reasonably certain that yes, it will be able to comply with the condition. So friends, since the time period has not been elapsed, the standard says that the related contingent liability or contingent asset has to be shown in accordance with Ind AS 37. So at the end of the 2 years, when the entity has recognized the government grant of rupees 1 crore in the books of accounts, so entity has to show the contingent liability also till the time period will be elapsed, right? So it will be a contingent liability. It will not be a confirmed liability. It will be a contingent liability. Is that clear? It will be a contingent liability, right? Is it clear, friends? Is that right or that is not right? So basically, so that user will be able to understand, although entity has done the accounting as per accounting standard, but yes, the contingent liability is still there. What is a contingent liability? The liability which will happen, which will confirm on the happening or non-happening of some future event. So they are saying that today it is a contingent liability. Why? Because this will be depending upon the happening or non-happening of some future event. Is that clear? Is that clear? Is that clear or that is not clear? And if the entity has done the accounting of government grant already, right? I mean to say the government grant has already been received and the entity has accounted for in the P&L, but the time period has not elapsed. So the related contingent liability, so the liability which may happen in future if the entity will default, so that liability has to be shown as a contingent liability, has to be disclosed as a contingent liability. So this is the only disclosure which is required. Uma is asking, sir, if the depreciation is not straight line, then what will be the effect of amortization? Uma, if the depreciation is not straight line, it is WDV method. The proportion of depreciation, the government grant needs to be amortized, just going by the matching concept, right? Now let's discuss the illustration from Institute study material, some illustrations quickly. Government gives a grant of rupees 10 lakh for past research of H1N1 vaccine to A Pharmaceuticals Limited. There is no condition attached to the grant. Examine how the government grant be recognized in the books of A Pharmaceutical Limited, right? So government gives a grant of rupees 10 lakh for past research of H1N1 vaccine to A Pharmaceuticals Limited. Friends, just give me 1 minute. Someone is knocking the door. Just give me 1 minute. So in this case, the government has given a grant of rupees 10 lakh, right? And there is no condition attached to it. So friends, going by the recognition criteria, one, entity will meet the condition. Here there is no condition, right? Here there is no condition. Second, grant will be received. There is a certainty that the grant will be received. Okay. So friends, in this case, both the conditions are meeting. Why? Because the entity is not required to comply with any condition and the government grant has already been received. So in this case, this entire grant should be immediately recognized in the profit or loss, right? Is that clear? Is that clear? Is that clear or not clear? So Namrata is saying in second year in P&L, the entity will account for grant in proportion to the 600 employees. So Namrata, the condition is not related to 600. The condition is related to the 100%, right? Which is 1000 employees. So even the entity will be able to employ 950 employees, but they will not reach the target of 1000. Still, they have to give the entire amount as a refund to the company. It is not a time period based. It is a target based. It is a number based, right? So that is why if the entity is sure that they will be able to comply with the condition, in that case, the entity will be able to recognize the government grant, right? Is that clear? Case 22 on the recognition. Again, we are discussing on the recognition. Government gives a grant of rupees 10 lakh for research and development of this vaccine to A Pharmaceutical Limited, even though similar vaccines are available in the market but are expensive. See, the vaccines are available in the market, but these vaccines are expensive, and the government has told them to manufacture a vaccine, right? Research a vaccine. And government is giving a grant of rupees 10 lakh for research and development expenditure. The entity has to ensure by developing a manufacturing process over a period of 2 years that the cost come down by at least 40%, right? So friends, the entity has to spend on the research and development expenditure, so that the cost of the vaccine, they will be able to find a salt so that the cost of vaccine will come down at least by 40%. Examine how the government grant will be recognized, assuming that A Pharmaceutical Limited has a reasonable assurance that the condition attached to the grant will be complied with. Right. In this case, since the entity is spending money on the research and development so that the cost of the vaccine can go down, so standard says that since assuming that A Limited has a reasonable assurance that the condition will be complied with on the day one, so this 10 lakh rupees has to be amortized, has to be deferred and recognized over a period of 2 years. Why? Because the expenses are also incurring over a period of 2 years. Is that clear? Is that clear or not clear? Namrata is saying now clear, sir. Next, the village of artisans in a district got devastated because of an earthquake. You understand artisans? Means the artisans means वो जो कुम्हार होते हैं ना, जो घड़े वगैरह बनाते हैं, सो मिट्टी के बर्तन बनाते हैं. So A village of artisans in a district got devastated because of an earthquake. A Limited, a company, was operating in the district and was providing employment to the artisans, right? The government gave a grant of rupees 10 lakh to A Limited so that 100 artisans are rehabilitated over a period of 2 years. Government releases 2 lakh rupees. Examine how the government grant will be realized. Okay. So a village of artisans in a district got devastated because of an earthquake. A Limited was operating in that district and was providing employment to that artisans. So A Limited was helping to that artisans so that by providing the employment to them. The government gave a grant of rupees 10 lakh to A Limited. So government has given a grant to A Limited so that 100 artisans are rehabilitated over a period of 3 years, right? And government has already released 2 lakh rupees. Examine how the government grant can be realized, right? So friends, in this case, what will happen? In this case, nothing is written that if 100 artisans will not be settled, then the entire grant will be refundable. Nothing has been written like that. So we will assume that the company will helping these artisans over a period of 3 years for their rehabilitation. Okay. And in this case, the company will recognize the 10 lakh rupees of government grant over a period of 3 years, right? And the related amount the company has to, show as a contingent liability. Sir, in the example which you have taken for 1000 employees, right? In my example, the condition was, if you will not employ 1000 employees, if you will not reach the target of 1000, if it is 999, even though in that case, the amount will be refundable, right? But if that condition will not be there, and the condition is you have to hire, 1000 people in 3 years, right? And of course, the 100% money was not refundable, right? So whatever employee you will be hired, so of course, to that extent, grant will be payable. So if this is kind of a scenario, in that case, you are required to defer the grant and amortize over a period of 3 years, right? Is that clear? Is that clear, friend? So we discussed what is the basic principle. The basic principle is the government grant has to be recognized in the manner in which the expenses is getting incurred over a period of the benefits, right? Is that clear? Okay. Now let's discuss non-monetary grant. What is meant by non-monetary grant? The government of Delhi has given the government of Delhi has given a land free of cost to A Limited, right? The government has given a land free of cost to A Limited. Right? Standard says that if a government is giving a non-monetary government grant, then there are two treatment of that government grant. One, of course, this asset is free of cost. So one, you have to recognize this asset and government grant at fair value. So assess the fair value of the non-monetary asset and account for both grant and asset at that fair value, right? So what will be the accounting entry? Land account debit, to deferred government grant liability. For example, the fair value is 1 crore So land account debit asset 1 crore to deferred government grant 1 crore. Sir, this land is a non-depreciable asset. And this deferred government grant of 1 crore. So how will we finish this government grant? The deferred government grant. So friends, in that case, the land is a non-depreciable asset, right? And you have recognized this asset in your books of accounts, right? Recognize this liability in your books of accounts and asset in your books of accounts. You need to see what is the time period if the government has imposed any condition, right? For example, if the government has imposed a condition of, let's say, 10 years. So in this case, you need to amortize, and you are reasonably certain that yes, we will be able to meet the condition, and the government has already transferred a land to the entity. So in that case, that government grant has to be deferred over the period of the condition. Sir, if nothing is there, the government has done the registry in the name of the entity, right? And the condition was the entity is required to install a plant in the rural area, and the entity has already installed the plant in the rural area. In that case, the entity can defer this government grant and recognize over a reasonable period. Let's say 10 years, 15 years, or 20 years, right? So they can make a policy that they will recognize this government grant as an income over a period of 10 years, right? So they have to make an estimate, or they have to make a policy, and according to their policy, they need to amortize this government grant. And the asset will always be there in their books of accounts. So the first thing is recognize the government grant and asset at fair value, right? The first one is at fair value. Just a minute. Second, nominal value. Nominal value means value for just a namesake. Record both asset and grant at nominal amount at, let's say, 1 rupee, 10 rupee, or 100 rupee. Asset account debit to government grant. Asset account debit to government grant, 10 rupees, right? So it has to be recognized at nominal value. Is that clear? Is that clear? A Limited wants to establish a manufacturing unit. Let's discuss one of the case from the Institute study material. A Limited wants to establish a manufacturing unit in a backward area and requires 5 acres of land. The government provides the land on a leasehold basis at a nominal value of rupees 10,000 per acre. The fair value of the land is 1 lakh rupees per acre. So the company wants to establish a manufacturing unit in a backward area, and they need 5 acres of land. And government is providing this land on a leasehold basis at a nominal value of 10,000 per acre. The fair value is 1 lakh per acre, and the government is charging nominal value of 10,000 rupees per acre. This means what benefit government is giving? 90,000 rupees benefit government is giving. Calculate the amount of the government grant to be recognized by the entity. So there are 2 ways for recognizing this asset or grant. A Limited will recognize the land at fair value, right? So the first one is fair value approach. Going by the fair value approach, what is the entry? Land account debit by how much? 5 into 1 lakh, right? 5 acre into 1 lakh, which is 5 lakh. 2, government grant to bank. The entity is paying 50,000 rupees, and government grant will be credited by 4,50,000 rupees, deferred government grant. Let's come to the nominal value, right? Instead of showing at gross value, full value, or fair value, the entity will just record this asset, non-monetary asset, at nominal value. What is the accounting entry at nominal value? Land account debit, land account debit bank account. Land account debit to bank account, right? By 50,000 rupees. By 50,000 rupees. Land account debit to bank account by 50,000 rupees. The amount which the entity is paying, simple as that, right? And in this case, of course, there will not be any recognition of government grant because it is a nominal value, right? Is that clear? Is that clear, friend? So the first is the grant and the land, the grant and the asset, both has been recognized at fair value, right? Means full value. In the second case, the land has been recognized at nominal value at what the entity is paying the money to the government. Sir, what happened if instead of 10,000, the entity will pay nothing? So it can be recorded at 1 rupees. Land account debit to other income, 1 rupee. Okay. It can be recognized at 1 rupee or 10 rupee, let's say, just for namesake. Right? Is that clear or it is not clear? Guys, tell me. Is that clear? Now let's discuss the presentation. And from presentation, the accounting will also evolve, right? Let's discuss the presentation part. There are two kind of grant relating to assets, grant relating to income. For example, the government has told a healthcare company that if you will construct a hospital, we will pay you the entire construction cost. So what is that? That is grant related to assets. And the government is saying, if you will operate a hospital, we will pay you 10 lakh rupees on a monthly basis for the OPD charges, right? OPD charges. What is that? That is grant related to income. That is grant related to income. That is the operational part. It is a grant related to income. Right? Friends, standard says that there are two ways for presenting a grant related to asset, or I would say there are two ways of doing the accounting of grant related to assets and grant related to income. What are these two things? For grant related to assets, right? Let's say the company has purchased an asset. The company has purchased an asset for rupees 10 lakh. Okay. Asset. $10 lakh. And the grant which the company has received is 2 lakh, right? So friends, there are always two approach: gross approach, net approach, right? Gross approach means full value, net approach means net value. So if a company has received any grant relating to asset, so how this grant has to be shown in the financial statements? Either presented in balance sheet by setting up grant as deferred income. So in this case, friends, what entity can do? Entity can show the asset at 10 lakh rupees and entity can show the grant as 2 lakh rupees, right? So the entity will depreciate this asset. The entity will depreciate this asset of 10 lakh rupees over the useful life. For example, useful life is 5 years. Useful life is 5 years. So going by the gross approach, this is known as a gross approach. Going by the gross approach, this 10 lakh rupees has to be depreciated over a period of 5 years. And this 2 lakh rupees is amortized over 5 years, right? So that this grant will be finished and this asset will also be depreciated. This is a gross approach. What is a net approach? Or deducted from the carrying value of the asset, net approach. Instead of depreciating 10 lakh over a period of 5 years and amortizing 2 lakh over a period of 5 years, let's do one thing. Show the asset at net value. 10 lakh minus 2 lakh, 8 lakh rupees. This is the net value of asset, and depreciate this 8 lakh rupees over a period of 5 years, right? Here, you are charging 2 lakh rupees as depreciation, and 2 lakh divided by 5, 40,000 rupees you are recognizing as an income. So 1.6 lakh is the net P&L impact. When you divide 8 lakh by 5 years, it will give you also 1.6 lakh depreciation every year. Is that clear? So whenever an entity is getting a grant related to asset, either that grant has to be shown separately as a deferred grant and amortized in the proportion of depreciation, in the proportion of expenses, which is getting recorded in the P&L for that asset. Or the entity can also follow the net approach. Whatever money the entity has been received or entity is expecting to receive, there is a reasonable certainty around it. The entity will net the asset from the grant, and the entity will depreciate the net asset value over the useful life of the asset. This is known as a net approach. Grant related to income. As far as grant related to income is concerned, the entity has to either present it separately as other income under P&L. For example, the OPD expenses every month is 15 lakh rupees, and government is giving a government grant of 10 lakh rupees. So either the expenses has to be shown at 15 lakh rupees in expense line item, and the income has to be shown as other income, 10 lakh rupees in the income line item. So either it has to be presented separately as other income, or this is a gross approach. So income has to be shown, expense has to be shown. The second one is, so other income 15 lakh, expenses 10 lakh. The other one is net approach, where what you can do, you can show this expenses net of reimbursement, net of receipt, expense minus receipt. So 15 minus 10. So net 5 lakh expenses you have to show in the P&L. I hope it is clear to all of you. I hope it is clear to all of you guys. Is that clear? Is that clear? Ravinder is asking, sir. Sir, if depreciable asset is provided, then what about depreciation? Ravinder, first of all, it is a non-monetary asset. Either you have to follow a nominal approach or a fair value approach. If you are following a nominal approach, then you have to debit the asset by 1 rupee and credit other income, right? So in this case, since you have recognized at nominal value, there is no depreciation. But if you have recognized at fair value, for example, it was a machinery which is given by the government, and the life of the machinery is 10 years, and you are following fair value approach. So the value of the machinery is 10 lakh rupees. So what you will do, you will debit machinery by 10 lakh rupees and credit government grant by 10 lakh rupees, right? So on the one hand, the asset will come as a 10 lakh rupees. On the other hand, the liability will come at 10 lakh rupees. But it is a depreciable asset. So you will depreciate this 10 lakh rupees of asset over a period of 10 years, and you will amortize, you will credit 10 lakh rupees of government grant over a period of 10 years, right? So other income will be 1 lakh rupees every year, and depreciation will be rupees 1 lakh rupees every year, right? Is that clear? Is that clear, Ravinder? Is that clear, guys? Yes. Grants related to income. The government of Haryana reimbursed the OPD expenses of Kedanta Hospital, which is treating COVID patient, amounting to rupees 1 crore pertaining to the financial year 1920. Advise the treatment of such support from the government. Friends, the hospital is incurring the OPD expenses, right? Amounting to rupees 1 crore. Okay, amounting to 1 crore. So the hospital is incurring the expenses and the government is reimbursing the expenses. So what could be the way by which this expenses can be presented in the P&L? There are two approaches. One, the entity can show the reimbursement from government as other income, 1 crore rupees, and OPD expenses as 1 crore rupees, let's say. Or probably if the OPD expenses is 1.5 crore, so the actual expenses and income has to be shown separate. Second, the entity has an option to net off this reimbursement from the expenses. And if the expenses is higher, the net expenses will be there. Or if the expense is 1 crore and the income is 1 crore, which is reimbursed from the government, then the expense will be zero. No income, no expenses, right? Such amount will be recognized in P&L either as an other income or it will be reduced from the OPD expenses, right? A Limited received a government grant of rupees 10 lakh to defray expenses for environmental protection. Expected environmental cost to be incurred is rupees 3 lakh per annum for the next 5 years. How should A Limited present such grant related to income in the financial statement? So friends, A Limited को 10 लाख रुपए की गवर्नमेंट ग्रांट मिली, लेकिन उसको अगले 5 साल तक 3 लाख रुपीस का 5 years तक इन्वायरमेंटल प्रोटेक्शन पे एक्सपेंस इनकर करना है. 3 lakh rupees. So in this case, what should be the accounting? The accounting is, first of all, this is the other expense and the income could be every year it can recognize 2 lakh rupees of income and 3 lakh rupees of expense. Or alternatively, what this company can do, this company can show the expense by reducing the income. Net expense, 3 lakh minus 2 lakh. So every year there will be a 1 lakh rupees of expense, right? So grant related to income are presented as part of P&L either separately or under a general heading such as other income. Alternatively, they are deducted in reporting the related expenses. So alternatively, 1 lakh rupees of net expense has to be shown as other expenses, or 3 lakh rupees of expenses has to be shown with 2 lakh rupees of other income. Right? Is that clear? Friends, it's 8:30 now. Let's have a 7 minutes break and we will start at 8:37. Okay? We will start at 8:37. In between, if you have any query, please post your query on the Board of Studies query link. So I will discuss that query after this break. discussed what is meant by government grant, what is meant by government, what is meant by government assistance. Then we have discussed that government grant will be recognized when two conditions will be met, when two conditions will be satisfied. First, the first one is, of course, when there is a reasonable certainty, when there is a reasonable assurance that the conditions will be satisfied, that the entity will be able to meet the conditions. Second, when there is a reasonable assurance that the grant will be received. If the grant has already been received, then this condition is over, right? Then you need to only see where the entity will be able to meet the condition or not. Otherwise, as an auditor, if the client is saying, I want to recognize this government grant in the P&L, then you need to ask two questions. One, what are the documents where you can make me sure that you will be receive this government grant? For example, the client will show you the notification. The client will show you the correspondence which have been exchanged with the government. The client will show you the confirmation which is given by the government, right? So basically, this is the documentation which you need to see just to ensure whether the entity will be able to receive the grant or will not be able to receive the grant. That is number one. Second, then you need to look at what are the conditions which is written on the letter or the notification which the entity is required to comply with. Then you need to inquire with the management that are you able to meet these conditions, right? And let me tell you, friends, for example, in my one of the example where 600 employees were already hired and 400 employees are yet to hire, and the government will give 1 crore rupees. So in that case, you have to see the win-win proposition. If the entity know that I will be able to receive 1 crore rupees, right? If I'll hire another 400 employees, and these employees will be required by the company as well, just for their operations, right? For their business. So why not the company will hire these employees, right? The point is, apart from having the reasonable assurance on the receipt of the money, you have to see the conditions as well. So, okay, these two things are there. Now you need to recognize the government grant. Sir, how this government grant will be recognized? Since this grant is something which is benefit outside, benefit from the outsider, benefit from the entity, outside entity, right? So, of course, this has to be routed through P&L. Now the question arises, sir, how will we recognize this government grant? Standard says that you have to recognize the government grant in the same manner or in the proportion, in the period in which the expenses has been incurred. For example, if the government grant is related to asset, in that case, you have to recognize the government grant in the proportion of depreciation over the useful life of the asset. If government is giving a grant for the condition which has already been completed by the company in the past, right? In that case, you need to recognize the government grant immediately in the P&L, right? If it is not for the asset, right? Third, for example, if the company is getting a grant for the purpose of expenses, meeting the expenses, in that case, you have to recognize the government grant in the P&L. When this expense is incurred, then you have to debit the expense and you have to reduce this government grant from the expense and you have to record the net expense. Or whatever government grant you are receiving, you can show it as other income and expense as other expenses. Okay. So that is that thing. Sir, if the entity is not having money, the entity is having an asset, then if the entity will be having an asset, in that case, the entity will recognize the asset either at fair value or at nominal value. For example, the entity has paid nothing and entity wants to record it at nominal value. What is the accounting? Land account debit, or let's say asset account debit to other income by 1 rupee. That's all, right? If entity wants to show it at fair value, then asset will be recorded at fair value, let's say 10 lakh rupees. And of course, since the entity has paid nothing, so what is that? This is something which is given by the government. So credit will be deferred government grant. Now this deferred government grant has to be amortized over a period, over the period of the useful life of the asset, right? The way the asset is getting depreciated and hit is coming in the P&L, in the same manner, in the same proportion, this deferred government grant has to be amortized and income has to be recorded in the P&L, right? That is number one. Second, if the asset is a non-depreciable asset, then this government grant has to be recognized either upfront, or the government grant has to be recognized over a reasonable period of time, let's say 10 years, 15 years, 20 years, okay, or 5 years, right? That is allowed. I hope so far everything is clear to all of you, right? Namrata, is that clear to you? Namrata, Sriram, Ravinder, I hope you guys are comfortable. Yeah, is that clear or not clear? Is that clear? Yes. Now let's discuss repayment of government grant. For example, the company has estimated that yes, we will be able to comply with all the conditions. The government has given a grant of rupees 10 lakh upfront in the year 1, and the entity has to maintain a condition or comply with the condition for the next 5 years. And if the entity will not be able to maintain this condition for the next 5 years, this grant is refundable. For example, this grant was given to the company for treating the, let's say, for treating the below poverty line patient, BPL patient, for the next 5 years. Okay. If the entity will default with the condition in these 5 years, the grant will be refundable. So friends, first of all, sir, the entity on the day 1, the entity was reasonably certain that yes, it will be able to comply with the condition. It was reasonably certain. So in the first year, 10 lakh rupees of grant has been received. What was the accounting entry? What was the accounting entry at the beginning of first year? Bank account debit to deferred government grant, 10 lakh rupees, 10 lakh rupees, right? That is in the beginning of year 1. Then an entity was reasonably certain, yes, we will be able to treat the patient below poverty line and we will be able to meet the condition, and of course nothing is refundable. So at the end of year 1, everything was okay. Year 1, it was okay. Year 2, it was okay. Year 3, it was okay, right? In the year 4, the default was there. Now this grant has to be refundable. Since on the day 1, the entity was expecting that yes, it will be able to meet the condition, the grant has already been received. So this 10 lakh rupees has to be amortized over a period of 5 years, right? This 10 lakh rupees will not be recognized in P&L upfront. Why? Because it is conditional. The condition has to be met over the period of 5 years. Number 1. Number 2, this grant has to be recognized in the profit and loss in the proportion of the expenses incurred in those periods. When the entity will treat the patient below poverty line, of course, entity has to bear some expenses. So entity has to bear some expenses. So they will recognize the expense in the P&L and they will recognize the income in the P&L. Now the question arises, sir, we understood that this 10 lakh rupees has to be amortized over a period of 5 years. So this is a liability. Deferred government grant will be a liability. So in the year 1, 2 lakh rupees has to be recognized in other income, and the balance is 8 lakh rupees in the deferred government liability. In the second year, again 2 lakh, the balance is 6 lakh at the end of second year. At the end of the third year, again 2 lakh will be recognized and the balance will be 4 lakh. right? But in the year 4, the default has been happened. Now the first question is, sir, when this default has been made, when this default has happened, whether this government grant accounting has to be corrected retrospectively or it has to be corrected prospectively. So standard says that in the year 1, initially, it was expected that the condition will be met. In the current scenario, there was a default. So it is not a change in policy, it is considered as a change in estimate. And whenever there is a change in estimate, the impact has to be taken prospectively. Retrospective restatement is not allowed. No third balance sheet, no comparative restatement, nothing. The impact has to be prospective, right? So first of all, it is treated as a change in accounting estimate. Sir, we have understood. Now, there were two types of grant related to income and grant related to asset. Sir, in this case, it is a grant related to income. Sir, what is the treatment of repayment of grant? Standard says that if the entity has recognized the grant on a deferred amortization basis, on a deferred government grant basis, on an amortization basis, first of all, whatever you are liable to pay, whatever balance which is there in the deferred government grant, you have to adjust from that account. The remaining balance you need to recognize immediately in the P&L. What does it mean, sir? So friends, what you are required to pay in the year 4 when the default happened, you are required to pay to bank will be 10 lakh. And what is the balance in the deferred government grant liability? The balance is 4 lakh. First of all, I will debit this deferred government grant. I will debit by 4 lakh rupees. Friends, we have only 4 lakh rupees in the balance as a deferred government grant, but we have to pay 10 lakh rupees. So this 6 lakh rupees we have already taken in the P&L in year 1, 2 and 3. So it means the difference between 10 lakh and 4 lakh, the 6 lakh rupees immediately we are required to recognize in the P&L. So P&L needs to be debited by 6 lakh rupees. So friends, if the grant is related to income, we have to first adjust this payment against unamortized deferred credit, which is 4 lakh rupees. Then balance to be recognized immediately in the P&L, which is 6 lakh rupees. Is that clear to everyone? Is that clear to everyone? Is that clear to everyone or it is not clear? Radhika is saying it is clear. Mayank is saying completely clear, sir. What about others, guys? Have you understood that it is considered as a change in accounting estimate, right? Second, if grant is related to income, if there is any deferred government grant balance, adjust it from that. If not, then completely from P&L. But if it is the balance is there in deferred government grant, in that case, you need to debit deferred government grant and you need to take the difference in the P&L, right? Okay, sir. Let's discuss grant related to asset, and it is little tricky. The grant related to asset, it is little tricky, right? It is little tricky. So friends, what is a grant related to asset? How this treatment has to happen? Repayment of a grant related to an asset shall be recognized by increasing the carrying amount of the asset or reducing the deferred income balance by the amount repayable, as the case may be. The cumulative additional depreciation that would have been recognized in P&L to date in the absence of the grant shall be recognized immediately in P&L. समझ आया? मुझे भी नहीं आया. So let me take an example to explain that what will be the accounting adjustment in case of repayment of government grant if it is a grant related to asset. right? Let's understand this with the help of this example. Repayment of a government grant. Below facts are given for AG Limited, and CFO needs an advice for treatment of refund in case of both the methods, right? Both the methods means when. So friends, the grant related to P&L we have understood, right? If there is a deferred government grant balance, adjust from that, the remaining will go to the P&L. In case of grant related to asset, there are two methods. What are the two methods in case of grant related to asset? What are the two methods? The two methods is one, asset to be shown at full value, gross value, right? And grant and the deferred government grant and gross value. Second, the asset has to be recorded net of grant, means net value. So friends, if the asset has recorded on full value, then what will happen? So friends, for example, in this case, the machinery was acquired for 15 lakh rupees, right? The machinery was acquired for 15 lakh rupees. The life of machinery was 5 years and the government grant received was 5 lakh rupees. Later on, 5 lakh is required to repay to the government grant in year 2. In the second year, it was required to be repaid. So friends, on the one way, the accounting of asset is going on if the company has obtained the full value, method 1, which is gross value. Gross value. In method 1, the cost of machinery was 15 lakh rupees and the deferred government grant is 5 lakh rupees, right? This 15 lakh rupees has to be depreciated over a period of 5 years, 3 lakh rupees depreciation every year. And this 5 lakh rupees needs to be amortized over a period of 5 years on straight line basis. So 1 lakh rupees will go to other income and 3 lakh rupees will go to depreciation. Right? So in case where the asset has been presented on a gross value method, asset has been recognized on gross value method, then life of the asset will not change. Then life of the asset will not change, right? Doesn't matter whether the government has taken back the grant or the government has not taken back the grant. The cost was 15 lakh rupees of the asset. The cost was 15 lakh rupees. And year 1, 2, 3, 4, 5, the debt is going to be recognized every year for 3 lakh. 3 lakh, 3 lakh, 3 lakh, 3 lakh, 3 lakh. What about government grant, deferred government grant? The deferred government grant was 5 lakh rupees. In the year 1, it was amortized by 1 lakh rupees. The balance was 4 lakh. In the year 2, the default was happened. So in the year 2, this deferred government grant, this deferred government grant was repayable, right? So what is the accounting entry? This deferred government grant was repayable. The accounting entry is simple. The deferred government grant balance, which is lying at 4 lakh rupees to bank, the entity has to pay 5 lakh rupees. The difference will go to the P&L 1 lakh rupees. As simple as that. Why? Because this 1 lakh rupees has already gone to P&L in the year 1. So balance of the machinery at the end of the year 1 is 12 lakh rupees. Deferred income balance at the end of year 1 is 4 lakh rupees, right? In year 2, 5 lakh rupees is to be returned back to the government, and accordingly 4 lakh will be reduced from deferred income balance, right? And 1 lakh will be debited to the P&L and 5 lakh has to be paid. And what is the balance of machinery at the end of year 2? Of course, 3 lakh rupees depreciation will be charged. So very simple. If the company has following the gross value measurement of asset and deferred government grant, in that case, the life of the asset will not change. Why? Because we have measured the asset at full value. But the government grant has to be amortized, and whatever is the unamortized balance it has to be debited and the full value has to be paid and the difference will be taken into the P&L. So it is just like a grant in the nature of income, but the method where net approach has been followed. What is the net approach? The asset has to be recorded net of grant. In that case, it is little tricky and it is little cumbersome, right? I hope the first part is clear to all of you. I hope the first part is clear. Guys, whether the first part is clear? Is it clear? Grant related to income, is it clear? Grant related to asset, when the asset has been measured at gross value. At the end of the year 2, what is the carrying value of the asset? 9 lakh rupees. Now friends, go by whatever method, either gross value method or net value method, your asset should be 9 lakh rupees. The carrying value of the asset should be 9 lakh rupees at the end of year 2, right? Now let's discuss this. Cost of the machinery was 15 lakh rupees. Grant received was 5 lakh rupees. The net value is 10 lakh rupees. The net value is 10 lakh rupees. Instead of debiting the depreciation by 3 lakh and crediting the income by 1 lakh, in the net approach, we need to depreciate it by 2 lakh rupees only. So closing balance at the end of the year, this by the net approach, the cost is 15 lakh. The grant is 5 lakh. So net is 10 lakh. So this will be recorded as an asset. This will be recorded as asset. So in this case, we are saying that our asset is 15 lakh rupees. But 5 lakh rupees is not a cost incurred by us. 5 lakh rupees has been settled outside, right? So for us, for we as an entity, the net cost is 10 lakh rupees, right? And instead of depreciating 15 lakh rupees and crediting income for 5 lakh rupees, what we will do? We will depreciate 10 lakh rupees over a period of 5 years and the depreciation will be 2 lakh rupees every year. So what is the closing balance? What is the carrying value at the end of the first year? The carrying value at the end of the first year is 8 lakh rupees, right? Now friends, in the year 2, and in this case, there is no deferred government grant. The asset has been shown at the net value. Now friends, in the year 2, the default has happened. And this 5 lakh rupees is refundable to the government, right? Now you tell me, in the first year, when we got the government grant, we have reduced the value of our asset. We have reduced the value of our asset. Don't you think when we are paying this government grant back, don't you think that we have to increase the value of our asset? In the first case, if you will see, when I was following a gross value, the carrying value at the end of first year was 12 lakh rupees. Here the carrying value at the end of the first year is 8 lakh rupees only. Don't you think that the fundamental, what you have applied, that 5 lakh rupees is not my cost. But now, when you are paying back this 5 lakh rupees, it will become your cost. So don't you think that you have to increase the value of the asset? Gross block has to be increased. Your value has to be increased. Answer is yes. Since 5 lakh rupees was paid back to the government, this amount will be added to the cost of the machinery. So what is the balance of machinery? 8 lakh rupees carrying value at the end of the first year, 5 lakh rupees repaid, 13 lakh rupees is the value of the machinery. Now friends, we have understood. So what happened in the year 1? In the year 1, the asset was shown at 10 lakh rupees. The depreciation was shown at 2 lakh rupees. The net block is 8 lakh rupees, right? In the year 2, when this 5 lakh rupees has been repaid, this asset has been recorded at 8 lakh plus 5 lakh. 8 lakh rupees carrying value plus 5 lakh. It is 13 lakh. Now what will be the depreciation in the year 2? What will be the depreciation in the year 2? Please write down step number 1. Please write down step number 1. Calculate depreciation. Calculate depreciation. Calculate cumulative depreciation till the year 2. Calculate cumulative depreciation till the year 2 if this government grant has never been received. Calculate depreciation till the year 2 if the government grant has never been received. So friends, if the government grant has never been received, then this asset must have been recorded at 15 lakh rupees, right? Then this asset must have been recorded at 15 lakh rupees. So depreciation per annum in absence of government grant, step number 1. Calculate depreciation till the end of the 2 year, till the end of the second year when you are paying back the grant, if the grant has never been received. So if the grant will not be received, the per annum depreciation will be 3 lakh rupees and the depreciation at the end of year 2 will be 6 lakh rupees. 3 lakh per year, right? 3 lakh per year, 6 lakh rupees will be the depreciation till the end of the 2 year, right? Step number 1. Step number 2, compute depreciation already charged. So what is the depreciation already charged? It is 2 lakh rupees. Step number 2, 2 lakh rupees, right? The difference between step number 1 and step number 2. What is the difference between step number 1 and step number 2? In step number 1, if the grant has never been received, the cumulative depreciation is 6 lakh rupees. Since the grant has been received and we are following net approach, so the depreciation which we have recorded is 2 lakh rupees. So how much depreciation we need to record extra? So we need to record the depreciation to the extent of difference between step number 1 and step number 2. So we need to record the depreciation by 4 lakh rupees, right? So we need to record the depreciation by 4 lakh rupees in the year 2. So 13 lakh minus 4 lakh. What is the net carrying value? What is the net block at the end of the second year? It will be 9 lakh rupees. Carrying value of machinery at the end of year 2 after all adjustment, 13 lakh minus 4 lakh, which is 9 lakh rupees, right? So friends, you can see that even in the approach number 2, where the entity was following net approach, the gross, the net carrying value at the end of year 2 is 9 lakh rupees. First approach, it was also 9 lakh rupees. If the grant is in the nature of, if the repayment of grant is in the nature of asset, first you need to see whether the entity has measured the asset and grant at fair value, I mean to say full value. If it is on a gross value, then the life of the asset will not change. The treatment of depreciation will not change. Whatever balance is lying in deferred government grant, the unamortized balance has to be debited. The payment has to be made. The difference has to be debited to the P&L. But if the entity is following a net value approach, in that case, first, whatever amount you are required to pay back, that amount has to be added back in the carrying value of the asset. Like in this case, the carrying value at the end of the first year was 8 lakh rupees and the payment was 5 lakh rupees. So the total becomes 13 lakh rupees. Then you have to compute depreciation. If this grant would have not been received, this grant has never been received, what would be the depreciation, total depreciation? So the total depreciation till the date of default is 6 lakh rupees. Now, step number 2, what is the actual depreciation charge? It is 2 lakh rupees. So whatever difference is there, like 4 lakh rupees, that has to be deducted in the year 2 in this case. So this 13 lakh minus 4 lakh will become 9 lakh. And you can see that in both the methods, your closing balance is matching. So this is the grant in the nature of repayment, the repayment of grant in the nature of asset, right? Is that clear? Is that clear? Now let's read this part. Repayment of grant related to an asset shall be recognized by increasing the carrying value of the asset. So whenever you are repaying the grant, it shall be recognized by increasing the carrying value of the asset. When you are following net approach, or reducing the deferred income balance by the amount repayable, or reducing the deferred government grant when you are following gross approach, as the case may be. the cumulative additional depreciation that would have been recognized P&L to date in the absence of the grant shall be recognized immediately in the P&L. The cumulative balance of depreciation means 6 lakh minus 2 lakh. The 4 lakh has to be immediately recognized in the P&L as depreciation, like we did. Is that clear? Is that clear, friends? I am really glad to see the response and participation of the students. In the last 2 hours on this small standard, we got more than 100 responses. Yes. Let's discuss the part of forgivable loan. What is a forgivable loan? A forgivable loan means a loan which will be forgiven by the government if the entity will comply with some condition. A forgivable loan from government for which the government has undertaken to waive repayment under certain prescribed conditions is treated as a government grant when there is a reasonable assurance that the entity will meet the terms for forgiveness of the loan. For example, the government has given a loan and that is a forgivable loan. So what is the first entry? Bank account debit to loan account. But government has said that, don't worry, if you will meet this condition for the 5 years, next 3 years or next 5 years, we will not demand this loan. And on the day one, the entity is reasonably certain that yes, we will be able to meet the condition. So in this case, instead of crediting loan, the entity will make an accounting entry, bank account debit to deferred government grant or government grant liability, right? Or government grant liability. Is that clear? Government grant liability. So friends, forgivable loan is nothing. It's a form of a government grant where the government is supporting the entity. And the government is also ensuring that if you will not meet the condition, of course, this loan will be come back to us, right? So it is another way of just giving a government grant. Loan at below market rate interest or loan at free of cost, right? So either at below market rate of interest or at a interest free, right? So friends, let me discuss this thing with the help of Excel file. I hope Excel file is visible, right? So friends, I'll discuss this part with the help of an example. It is an important part, right? Interest loan given by the government. Interest loan let's say government of Rajasthan has given an interest loan to AG Limited. Government of Rajasthan has given an interest loan to AG Limited for rupees 10 lakh on 1st April 2016, right? The period of loan is 5 years. The market rate of interest is 10%, right? And you need to advise the treatment in this case in the light of provisions of Ind AS. Government of Rajasthan has given an interest-free loan to AG Limited for rupees 10 lakh on 1st April 2016. The period of loan is 5 years. The market rate of interest, if it would not have been interest-free, in that case, the market rate of interest is 10%. You are required to advise the treatment of this loan in the light of provisions of Ind AS 20. In this case, let's discuss this part. Analysis. In this case, this loan will be treated as a financial liability. This loan will be treated as a financial liability, which has to be measured as per Ind AS 109. The interest-free portion will be considered as a government grant. which will be considered as Ind AS 20. Okay. Now, we understood that loan is a financial liability, we understood. But what is a government grant, right? Because we got a loan and we will pass an accounting entry, bank account debit to loan account. But since it is an interest-free loan, and Ind AS 109 says that the loan has to be recorded at amortized cost or at fair value, right? Now, what is that? First of all, let's understand how this government grant will be calculated. What is a government grant? So government grant is equal to proceeds from the loan minus present value of the outflow of the loan, or let's say fair value of the loan as per Ind AS 109. What is a government grant? The government grant is equal to proceeds from the loan minus present value of future outflows or oblique fair value of the loan as per Ind AS 109. And what is the proceeds of the loan? The proceeds of the loan is 10 lakh rupees. 1, 2, 3, 4, 5. What is the present value of future outflows or fair value of the loan as per Ind AS 109? We need to calculate this. We need to calculate this, right? How to calculate this? Now let's discuss this part. Present value of the loan or fair value of the loan. What is the outflow? What is the outflow? Outflow after 5 years. The outflow after 5 years is 10 lakh rupees. What is market rate of interest? What is fair value interest? It is 10%. What is my present value? Present value is 10 lakh divided by 1 plus rate of interest, 1 plus rate of interest, which is 10% to the power 5 to the power 5, right? This is coming out as a 62921. 62921. Have you able to calculate this fair value or present value of the loan? I hope you have understood this. I hope you have understood this part or not. This is my present value of future outflows or fair value of the loan as per Ind AS 109. Is that clear? Sriram, is that clear? Namrata, is that clear? Till now, is it clear or not? Guys, I'm not getting a response. Till now, is it clear to everyone? I am telling you how this interest-free loan has to be accounted for, or how the concessional rate has to be accounted for, right? Is it clear or not clear? So in case of an interest-free loan, you have to split this loan between a government grant and between the financial liability, between the loan. What is a government grant? It's a difference between the actual amount of the loan received minus fair value or present value of the loan. Yeah. In this case, my financial liability, this loan, will be 6 to 62921, which is as per Ind AS 109, and my government grant will be how much? It will be 10 lakh minus 620,921. It will be recognized as Ind AS 20. What is the accounting entry? The accounting entry is bank account debit to loan account to government grant. Bank account will be debited by 10 lakh. Loan account will be credited by 62921, and the government grant is the difference between these two. This is the accounting entry on the initial recognition. Now this loan has to be accounted for as per Ind AS 109. This government grant has to be accounted for as Ind AS 20. Sir, what is the accounting? What is the accounting for the next 5 years for this loan and for the government grant? Let me talk about the accounting as well, right? So I will prepare the loan schedule, because after 5 years this has to be paid to the government, pay back to the government. Loan schedule and deferred grant schedule. Deferred grant schedule, right? Let's put year one. Let's put year 1, 2, 3, 4, 5, right? Here, first of all, opening balance, then your interest at the rate of 10%, then your closing balance, right? Closing balance. What is the opening balance at the time of initial recognition of loan? 620,921. Now, it has to be compounded by 10%. 10% interest is required to be recognized. Your closing balance will be this plus this. This will become your open balance, right? Again, interest is required to be charged on this, right? So third year, this will become your opening balance. You have to charge 10% interest on this amount, right? This will become your closing balance. Again, this closing will become your opening balance, right? You have to charge interest at the rate of 10%. Then your closing balance at the end of year 4 will be this one. Then this will become your opening balance. You have to charge interest, and this will become 10 lakh rupees. So friends, you can see that this 60921 has become 10 lakh at the end of it. And every year you have to recognize an interest of this amount. Every year you have to expense in the P&L. Expense in P&L. In P&L by how much amount? This one. Every year. Now coming to the deferred grant. Opening balance, right? Other income, amortization, and your closing balance. What is the opening balance of the grant? 679,079. It has to be amortized on a straight line basis, divided by 5, right? This minus this. This will be your opening balance, right? Again, it will be the same number, 75816, right? This will be your closing balance. Again, same number, right? This will be your closing balance. And this will become your opening balance in the 4th year. Same number, right? In the 5th year, this will become your opening. Same number. At the end of the 5th year, it should be 0. And it has become 0. You can see that this 79079 has become 0. Right? Income in the P&L. What is my income in P&L? What is my income in P&L? What is my income in P&L? Expense over a period of 5 years is 79079. My total income over the period of 5 years is 379079. Now net impact in P&L. This is the net impact in the P&L. What is the net impact in the P&L? Income minus expense is the net impact in the P&L. In the first year, 13,000 income, 7,514, 684 negative. It should be 0 over a period of 5 years. The net impact has become 0. Is that clear to everyone? Is that clear to everyone? This calculation of loan schedule, how this interest has to be recognized, how this grant is to be recognized. Is that clear to everyone? I will of course share this Excel file, right? Yes, Rohan, I'll share the PPT as well as the Excel file. I'll share that. Okay. Is that clear? That how this accounting has happened? Namrata, is it clear? Sriram? Thank you, Radhika. I got a confirmation from 3 participants. Is that clear, guys? Okay, let's move on. We discuss this thing in detail with the help of this example, and you will be able to understand with the help of this example that how we are treating this interest loan as a financial liability in government grant, and how will we are calculating this government grant, right? How we are calculating this government grant. Yes. Let's move on for the next part. Let's quickly cover this government assistance as well. We have already covered this part. Now cover this again. So we have discussed this government assistance which cannot reasonably have a value placed on it, where the value is not identifiable, right? The transactions which cannot be distinguished from normal trading transactions. For example, government procurement policy resulting in a portion of the entity's sales, right? So basically, government assistance is just like providing a support where you cannot identify that thing in terms of value, right? Or let's say government is procuring, let's say government is one of your major customer, right? So in that case, you will not say that government is providing a grant to us. Government is purchasing the material and paying the payment for the goods and services, right? So this is not in the form of government grant, right? You can say that our 50% sales or our 70% sales is made to the government. You can say that, right? But it is not like that you will say that no, everything is that this is a government grant. Okay, like IRFC. Have you heard about the company IRFC? So IRFC is doing all the leasing or funding related transaction with IRCTC, with the railway board, right? With the railway government. Okay. Action by the government designed to provide an economic benefit to an entity or range of entities, like technical or marketing advice, government procurement. So these are kind of the government assistance, right? So you are required to disclose if you feel that financial statements are not misleading. Disclosure part, you need to disclose the accounting policy for measurement and presentation. You need to disclose the nature and extent of grant recognized in financial statement, indication of other form of government assistance. If there is any condition which is required to be fulfilled and any contingencies are there, it is required to be disclosed. Comparison, the concept of government assistance is not there in AS 12. In Ind AS 20, it is there. Coming to the non-monetary asset, in Ind AS 20, it says that there is an option to value non-monetary asset received as a government grant at fair value or nominal value, right? Fair value or nominal value. But in AS, non-monetary asset given at concessional rate should be accounted for at their acquisition cost, and if given free, should be recorded at nominal value. So in AS, fair value option is not there. In Ind AS, fair value option is also there. The concept of government grant in the nature of promoter contribution is there in AS, but it is not there in Ind AS. In Ind AS, if the government is giving a capital contribution to the entity, it is outside the scope of Ind AS 20. Forgivable loan concept is not there in AS, it is there in Ind AS. Loan at below market rate concept is not there in AS. In Ind AS, it says that the difference between the proceeds of the loan versus the fair value of the loan has to be shown as a government grant, right? If I compare between Ind AS and IFRS, there is no difference between the government grant, right? Is that clear? So Tushar is asking, sir, where did other income come from? Tushar, if again I'll go back to the Excel file, you have seen that what we have done we have bank account debit to loan account to government grant account. This loan account, at the end of 5 years, this loan account, this liability will be increased. This will become 10 lakh rupees. At the end of, not here, at the end of 5 years, this liability will become 10 lakh rupees. End of 5 years. And at the end of 5 years, this government grant liability will become zero. When liability will become zero, it means you have to debit the liability and you have to credit the other income, right? When this liability will increase, it means you will have to credit the liability and you have to debit the expense, right? Is that clear? Is that clear, Tushar? Now I'll quickly discuss some multiple choice question. Which of the following is not covered by Ind AS 20 government grant? Tax break, employment grant, subsidized loan, forgivable loan. Which is not covered in Ind AS 20? Employment grant is covered, subsidized loan is covered, forgivable loan is covered. So what is the right answer? A is the right answer, right? Government grant should be recognized when there is dash that the entity will comply with the condition and the grant will be received. Absolute certainty, reasonable assurance, probability, or some possibility. What is the right answer? The difference between AS and Ind AS will not come. Okay, I don't think it will come. Reasonable assurance. You're right. Reasonable assurance. Right answer is B. If an entity receives a non-monetary asset as a grant, this is accounted for at market value, present value, fair value, nominal amount, either C or D. You remember I have told you fair value or nominal amount. Both the options are there for non-monetary asset. So E is the right answer, right? E is the right answer. Question number 4. Which of the following is not a correct treatment of government grant related to income? Present as separate credit under a general heading as other income. Deduct from the cost of the asset, deduct from the relevant expenses. So we are talking about the income. So of course, B is the right answer. Means you are not required to deduct from the cost of the asset. The B is not a correct treatment. Right? If a grant must be repaid, it is an error, change of an accounting policy, new transaction, change in estimate. What is that? It is a change in estimate. Yes. Question number 6. Which of the following is the correct way of presenting government grant related to an asset? Deferred income, credit to income in period received, deducting the grant from the carrying amount of the asset, either A or C. What is the right answer? Yes, it is D. Either you have to deferred income, you have to present the asset at gross value and the grant as a deferred income, deferred government grant. And the second option is net option, where you can reduce the grant from the carrying value of the asset. When a government agency purchases shares in an entity, this is covered by Ind AS 20. So when the government is investing in an entity, it is covered under Ind AS 20. Yes or no? No. It is false. The government participation entity is not covered. Which of the following disclosure is not a requirement of Ind AS 20? Accounting policy, it is required. Nature and extent of grant recognized in the financial statement, it is required. Unfilled condition, contingency, it is required. Current grant application is in process, it is not required. D is the right answer. So thank you so much, friends. I have covered this government grant with a lot of questions from institute study material, right? And I have also covered the differences as well as multiple choice question. I hope you have enjoyed the session. I hope you enjoyed this entire Ind AS 20. Thank you so much. Bye bye. Take care.